I'll call in my fellow operators from some of the top operators in the kingdom. So I'll start from left to right. Ayman Ezzeddine from Radisson. Talal Yousif from Marriott. Adil from Louvre Hotel, and Alexey from IHG. Assalamu alaikum. Good morning, everyone. So if we look at some mature hospitality markets, Paris, London, you name it, and you look at the structure in terms of supply, you would see that it looks more or less like a pyramid. The bottom of it is the more affordable segment. And as it goes up, you go till the luxury, the top of the mountain. And this is one of the key questions that once we compare it with Saudi Arabia, we see that that pyramid is slightly distorted. And we wonder why. One of the reasons is because the mid-scale segment is not as present, not as wide as what the other markets would provide in terms of supply and variety of offerings. And we'll ask ourselves, if we look at the market data today, as of 2024 year-end, the mid-scale, upper mid included and below, is about 40%. And if we look at future supply, it's around 22%. So we have a sort of inverted pyramid, which is the subject of today, the mid-scale segment and how we can improve it. So today I have a selection of the top operators who are with us today. And we'll start with the first question around the luxury segment. So I'll start with you, Adil. Why do you see so much luxury development happening at the moment?
Thank you, Oussama. In my opinion, in the past, the mid-scale products in Saudi have been perceived as inferior products. And the reason behind it, because there was no an authority that was taking care of the zoning rights, of giving the licenses for basically any building. You could just slap the hotel apartments, and that would be perceived as a mid-scale product for the guests across the kingdom. Today, obviously, with the introduction of the Ministry of Tourism, a lot of incentive programs for development of mid-scale hotels, much stricter boundaries on giving the licenses for the hotels, we are seeing the rise of this segment in the country. And during the conference, I came across to a very interesting figure. 72% of non-traveling Gen Z travelers in the kingdom have chosen to stay domestically in the Saudi Arabia. And when we are looking at them, and that's the beauty of Saudi Arabian market, the majority of population are millennials, Gen Z. It's a country with a 40 million population, and when they travel, they explore their own country, which is extremely enormous. They are looking forward to stay in a great product for a reasonable price.
Amazing. So maybe if we stay within the luxury segment, Marriott has signed quite a few luxury properties in some of the mega and giga projects. Was there a specific reason why it was focused around that? And were there any discussions about the mid-scale segment as well?
Yes, so for us at Marriott, obviously we've all witnessed what happened in the kingdom in the past few years, this transformational initiative with Vision 2030. And obviously the early strategy in the country was to put the country on the global map of tourism. And luxury was actually used as a symbol of status and a visual symbol of statement to put the country on the map. And we were part of that journey with our portfolio of luxury hotels, obviously putting some of our most prominent luxury brands on the giga projects. And I think the luxury phase was kind of necessary to put the country on the map, because it ended up also enticing the private sector, which was lured into that space attracted by the perception of prestige of those luxury brands. And we are now witnessing a shift in the market with the entrance or the development of the mid-scale space right now. And it's part of the cycle of the maturing of the market. We're seeing tremendous opportunities, which we can discuss in the next questions.
Fantastic. So what you mentioned right now is that you have a lot of the future luxury supply that is driven by the mega and giga project, but also the private sector outside of these areas as well because of the prestige and some of those other reasons that you have mentioned. Now, if we want to go back to the mid-scale segment and the mid-market generally speaking, we're going to look at some of the reasons why it's been slow in terms of progress as part of the wider future supply share. So this question goes to you, Alexey. What sort of, I'd say, reasons have you seen in terms of maybe land prices or urban restrictions or some of the discussions that you've been having with the operator?
Thank you for your question. Listen, I think it's also valid what Talal said, right? The market of Saudi Arabia in a global scale is a fairly new market, right? Even though, yes, some of the hotels like IHG is going to celebrate 50 years in September of being in Saudi Arabia. But market as a whole has only really experienced this boom in the last few years. So it is normal that the first hotels that are going to come are going to be the luxury, the upper upscale, the upscale. We've seen this, other regions I've worked in where we've seen emerging markets. This is a normal trend. So I wouldn't necessarily say that the mid-market segment is slow, is lagging. I think it's a natural evolution of the market. First come the, kind of the big, the 5 stars, the shiny brands, which attract the attention of international traveler, international investor, and then you start kind of going down into the mid-market segment. Now, I think we are seeing more and more interest in the mid-market segment. However, and listen, by the way, if you look globally, look at the players here, all of our biggest brands are in the mid-market segment, right? For us, the Holiday Inn family of brands is over 4,000 hotels. So I think the future is definitely there. Now, you mentioned land prices. I think definitely land prices play a part. We've seen those skyrocket in the last couple of years across the kingdom. And sometimes, you will have a great plot, central location. You look at it on paper, absolutely makes sense to do a mid-market hotel. You look at the land value and then the cash you're going to get from your asset, and it stops making sense, right? So I think, is that a temporary thing? Hopefully, yes, because the market does need mid-market hotels. The young generation traveler likes to have high-quality, affordable accommodation, being present in multiple locations around the country. We have to remember Saudi is a huge country, right? And we're not talking about, the 4 main cities, Riyadh, Jeddah, and the holy cities. There are so many other cities in the country. And those markets from a hotel point of view will not sustain an intercontinental in every city, right? They will not sustain a Regent in every city. You will want to optimize your investment by going into the mid-market segment where you can still provide for a fantastic guest experience. Guests can be part of all of our, big loyalty programs and get all the benefits they're used to getting with a big operator, but still pay a reasonable price, within their journey.
Thank you.
Oussama,
Go ahead.
just to add to what Alexey was saying, and it made perfect sense. It's the main reasons. Another thing is the culture of the region. If you look back, if you used to say 3-star or mid-scale, it was the perception was that it was low quality. So while in Europe, a 3-star good quality hotel exists and people go to it, for, it's one of their first choices, value for money. Here, there was always a fear that the service they get and the quality of what the product is was not up to expectation. So that's from the guest point of view. Also, the owners, at first, and I think we all saw that at the beginning, they wanted more of a trophy asset. They wanted to feel proud of their building. So that also that associates with luxury and the higher brands.
Understood. Thank you. So we'll maybe jump into something interesting, a case study, let's say. So you mentioned that land prices are a bit high right now, and obviously some numbers don't add up. So one of the possibilities is that for that same land price, you can build more, and by building more, it starts to add up. But in many, I'd say, tier 2 cities, the current urban regulation, obviously things will change, etc. But some are still restrictive in terms of what you can achieve. So how would you, I'd say, build in an environment where you cannot build a lot of floors, and we all know that mid-scale needs a lot of keys to be profitable?
Yes, I mean, that's ideal. The larger the product, the more efficiency you will find. But now using new technologies, and it goes back to the design. So if you start on the right foot from the beginning with the right developer, the right designer, and all of us have very strong technical service teams to make sure that brand standards are followed, but how to make and adapt that new design to our brand standards and to make money at the end. So it starts with design, then using the right material for construction, and then you move over to operating efficiencies. It could be cluster management, and it doesn't mean that you have to have 2 or 3 mid-scale hotels in the same city to have a cluster. It could be different segments. It could be luxury or upper upscale and a mid-scale, but you'd still have one cluster management, one cluster sales and marketing, so the higher costs of the people would be clustered, and back of the house could be in the big building. In the least expensive part of town, you'll do the laundry and have transportation. So it's all about efficiency to make the numbers work.
So you mentioned basically design efficiencies as well as operational efficiencies. I feel that there is some more to say about
Just
this.
I only wanted to add to this. Everything you said is absolutely correct and valid, but I always take it back to where you get involved, right, is at the early stage. All of us here at this stage, all the operators, our role is to enhance a hotel product, but the product itself has to be correct. So when we're at the early planning stage, if we plan for a 4-star or a 5-star, where really the market only supports a 3-star, very rare, an operator is not a magic pill that you take and everything suddenly becomes amazing, right? If the market conditions are not there, they're not there. So everything you said, absolutely agree with it, but you have to really, first stage when you look at the concept, when, like I said, the likes of your consultancy gets involved, really understand, is the product that we're putting in place going to be successful regardless of the brand? And then comes everything else.
Yeah, I think just to add to what Alexey said, obviously, I mean, mid-scale inherently thrives on scalability, obviously. But again, it depends on the market, it depends on the location, and it depends also on the metrics of the project itself. But obviously, if you look at the potential in the kingdom, it's all about right now and I think my colleagues would agree, about scaling our footprint in secondary and tertiary cities. And when we start looking at these markets, it's not about scalability, it's about location. And typically, we would look at an optimal projects that either are smaller in size, but also can potentially combine a dual branded type of project where you have a hotel brand and an extended stay brand with shared services, clustering, and operational synergies. And so it's all about location. And again, whether it's a standalone, you can see the potential of a standalone mid-scale hotel in a secondary location, but also, mid-scale also can thrive in a mixed-use development if the components complement very well the hotel. And for example, if we look at one of our fastest growing lifestyle mid-scale brands, Moxie, for example, we have amazing examples in Europe where it's amazing primary location and a mixed-use development where it really acts as an anchor for the community, an experiential hub, and acts basically as a magnet to the mixed-use development. So mid-scale is versatile, but you have to also adapt it to the markets. I mean, if you look at the holy cities, for example, I think we all agree that conversion is a big topic, is a big opportunity there. We have our recently launched 4 Points Flex by Sheraton, which is a conversion-friendly brand, which is very well suited for conversions of typical, pilgrim hotels that have a very prototypical type of configuration. So mid-scale is very adaptive. Yes, some maybe investors might see it as not as aspirational product, but I think the mindset of owners is shifting to more of an investment-driven, return on investment type of mindset.
That's fantastic. So to summarize what you mentioned, obviously clustering back-of-house operations, making sense of the product before it goes down to the operators. And we tend to maybe think that mid-scale is less location sensitive, but apparently it's also location-driven, especially in tier 2 cities. With conversions. So you did mention the mixed-use component, and this is another question as well open to you. Some people may think that mid-scale would not associate with branded residences, for instance, because it's still not, it does not reflect that sense of luxury. What's your take on that as well within that sort of mid-scale integration? Shall we start with you?
Yes. I mean, it was, I think, the previous perception was that. Now people are changing, the market is changing. There is a strong demand for mid-scale branded residence. I mean, you have a much bigger pool of people looking for that. And people that, have a certain amount of budget, but they want quality. So by having a mid-scale brand, you feel comfortable with the quality that's coming. So investing in it, there is definitely demand for it right now. And as Talal was saying,
Ladies and gentlemen, please join us for a curated networking session at the networking lounge right now. We're discussing wellness in tourism and hospitality.
Okay. Okay.
7.5 minutes.
Okay, thank you.
I think, just to add on the branded residence topic, because it's something that we are really witnessing in the market. Obviously, at Marriott, we have a very unique value proposition with branded residences with our luxury brands and our premium brands as well. But we're seeing also a shift in the market where there's increasing demand for branded residences in the lower tiered brands, whether it's in the 4-star or the mid-scale. Obviously, right now at Marriott, we have some of our brands which are registered for residential use, but primarily in the higher tiers. But we currently are working on plans to get one of our mid-scale brand registered for residential use, which is the lifestyle Moxie brand. And we are looking at opportunities to roll it out as a co-located type of development, so a hotel with a branded residence component. And we are initially targeting in the region, obviously Saudi Arabia, the UAE, Turkey, and Egypt, and South Africa. Because we see it as a way for us to accelerate our footprint through the development of hotels, while still offering a branded residential value proposition through the sale of units and a rental pool program as well.
Fantastic. So Adil, maybe you have some mixed use as well with the offices? Or maybe branded residences?
Exactly. But we are actually also noticing nowadays that when we are receiving an offer for the mid-scale branded residential development, a lot of owners are looking forward for the mandatory rental pool, because it's a great investment tool nowadays. People are not just using these branded residences from a perspective of being the end user. They are just buying it as an investment tool, and given the ROIs that the mid-scale products are giving in comparison to the upper upscale luxury products, when you give it to the rental pool, you let the operator manage it, you drive high occupancy as an operator, the ROIs are there, tend to be between 12 to 15% in mature markets, obviously. And as a mid-scale product, when you are a master developer, you have your mixed-use product, you have your GFAs that you are allowed to build. When you look at the mid-scale hotel, for instance, with our company, we are looking at 35 to 40 square meters GFA per key. You are allowing to maximize the key count, and yet you are not taking too much from the mixed use and maybe focusing more on the residential aspect, mall, offices, or whatever else will make more money to the owner.
Anything you want to add on that, Alexey?
Look, I think, again, it's very easy to go last in line because you can just say, I agree with everything that was said before. But I think, whilst I do agree, I think it's very important to remember that, especially when we look at the mixed-use development, right, the hotel component, the hotel brand, becomes really the anchor for everything, right? And so the choice of that brand, be that mid-scale segment, yeah, be that upscale luxury segment, is really important because that's really going to elevate your whole development, right? Whether that's just a hotel with a branded residential, or even a branded residential standalone, right? This is why developers look to put one of our brands on their asset, is to elevate that asset itself, but also to elevate the whole development around it.
Thank you for that. Given the time left, I think I'll jump to some specific, I'll mix and match between questions, and I'll let you answer in the best way possible. So in terms of innovation, technology, and at the same time design, we all have seen that mid-scale is becoming nicer and nicer in terms of look and feel. Design is being democratized. There is a concern regarding construction costs. How would you, I'd say, combine that with area per key? And is there any innovation or any new components which enable that balance to be maintained?
I think here would be interesting to cover the sustainability part, because I have spoken to one architect recently, and he told me that the building's life cycle is 50 years. And out of the 100% of the investments that you make in that building, only 15% is the initial investment. So whenever you are trying to be efficient and smart in a sustainability approach to it, be it LEED certified, platinum, gold, doesn't matter, it certainly helps to reduce the cost by at least 10% per annum during the operational time. So it's not only about how the operator approaches the building from a management perspective, repair and maintenance, but also how smart you are initially by investing maybe 20% more, but by reducing like at least 10% per annum for the rest 45 years.
Thank you. Who wants to?
Yeah, I think maybe just to add as well, I mean, right now what we're seeing, the evolution in the mid-scale space, obviously we are seeing the emergence of more tech-savvy or tech-oriented brands, and I would probably mention the recent brand that Marriott acquired, Citizen M, which is a brand that is quite geared toward tech-savvy travelers, millennials and Generation Z, which combines two value propositions. One is the tech approach at every touch point of the guest experience. So typically things related to app-based check-in, checkouts, digital concierge, and a lot of smart enabled solutions, but also sustainability aspect in terms of water saving initiatives, solar panels for energy saving, because these type of initiatives don't only have a positive impact on controlling operating expenses, but it resonates very well with the new generation of travelers, millennials and Generation Z. So yeah, that's
Thank
my.
you. Alexey?
Yeah, I would also add to this. We've been, especially with our Holiday Inn Express brand, extremely successful with the modular construction. And this, if the whole chain works out, that really drastically reduces your construction time and therefore improves your returns. So I think this is something, there's plenty of partners that we work with around the world who produce these modules, and it's fantastic. You see these hotels just, like Lego blocks, they come up in weeks, right? So this is really something, if that can be unlocked in the kingdom, in the mid-market space especially, that can really propel them to develop much faster, and then hence, owners start seeing returns much earlier.
I mean, like Alexey said before, they said everything pretty much. I like to focus on sustainability and technology. Two elements that are, they increase the cost of construction at the beginning, the cost of the development, but done right, they will decrease the operational cost of running the hotel and increasing the profit. So definitely, reducing number of staff, which is a very big cost in all the regions, not just Saudi. Recruiting, keeping, I sat with one of our GMs the other day and he was saying he has one problem right now, that every time he trains a really good staff member, somebody else comes and takes him to another, especially when you're talking in the mid-scale sector. So he's really good. He's never gonna get the same salary as from a luxury hotel. So they get poached, but it shows that he's doing a good job and working hard for the owner.
Fantastic. Anything from your end, Adil, before we end? I think we came to the end of this panel. Any closing remarks?
No, I think the group has covered it really well, so there is nothing else to add. But just this modular construction, this is really where I think everyone goes towards. I think Radisson, just like us, were owned by Jinjiang International, so this Chinese modular approach for the construction, it's exactly like just box after box after box popping up.
Maybe one last closing remark is that if you look at the earning profiles within the domestic segment, so the local market, you do see a sort of range of high spenders, mid spenders, etc. And we need to be mindful of those in the future to cater for that market. And the domestic market will be the first one to sort of benefit from what is currently happening in terms of change, especially in Tier 2 cities. Any last questions? I think this ends our panel for today. Thank you, everyone, for attending.
Thank you.